Today we got another company breakdown. Today we will be doing TPL, Texas Pacific Land. But before we get into the video, y'all know I like to show y'all how I match my fit to the stock. You know what I'm saying? Closet full of knowledge. That's what I like to call it, man. I like to match my drip with the stocks and the books. So you can see I got this hat from this apartment complex that I never stayed at. We got this Nashville t-shirts like burgundy and gold. These really weird camo pants. They have like different types of camo print on them, like different colors and stuff. Thought these were pretty cool. And we are, for the shoes, we went maroon sixes for obvious reasons. So yeah. Now that we got that out of the way, let's get into this stock, man. If you're coming from my shorter version of this, shorter breakdown version of this company, welcome back. I appreciate you for rocking with me. If you're new here, you know what I'm saying, this is your first one, I hope you learned something. So yeah, man, today is Texas Pacific Land, ticker symbol TPL. We are in the energy sector, more specifically the oil and gas industry, and they have a market cap of $24 billion, which puts it in the large cap category. So the company profile. So Texas Pacific Land, and I like to read these verbatim, but I'll break it down a little bit later, like what they actually do. But Texas Pacific Land Corp is mainly engaged in the sales and leases of land owned, retaining oil and gas royalties, and the overall management of the land owned. It operates in two business segments, including land and resource management and water services and operations. The land and resource management segment focuses on the managing of its oil and gas royalties and surface acres of land. The water services and operations segment encompasses the business of providing full service water offerings, infrastructure development, and disposal solutions. And the company generates the majority of its revenue from that first line of business, being the land and resource management segment. Oh, my fault. And the CEO, his name is Tyler Glover. And I always like to leave the CEO. I like to leave management and leadership towards the end of the end of the video, so you can see what these people are doing before you see who they are. I don't know. I just like it that way. So the fundamentals of this company, they have a PE ratio of 54 versus an 11 industry mean. So they are a lot more expensive than the other companies in that sector, but for good reason, as you'll see. They have a cash to debt ratio of 764.7, right? And okay, so we have a little typo right here. They have $725 million in cash, not $72.5 million, but $725 million in cash versus $1 million in debt. They have a WACC versus ROIC. If you don't know what those two are, so your WACC is your weighted average cost of capital, basically how much it costs you to borrow a dollar, and your ROIC, which is your return on invested capital, how much do you get back for every dollar that you invest, right? So they have a WACC of 8.6, so it costs them about $8.50 to borrow a dollar, and they have a return on invested capital of $110.79, or 110.79%. They have a net margin of 66.71%, and I've come to learn that anything above 10 is good, anything above 20 is great, and they're in the 60s. They have better net margins than NVIDIA, so amazing. They have a free cash flow of $378 million, and they've been growing that free cash flow at a 5-year growth rate of about 22.1%. They have revenues of $632 million, my fault, and they've been growing that revenue at a 5-year growth rate of 15.8%. Their return on the equity, 42.8%, killing the game. Return on assets, 38.51%, again, killing the game. Performance-wise, year to date, they are up 97% at the time that I did this research, and the past 5 years, they have returned 424%, killing the game, like I said. They have a dividend yield of 0.44%, and that equates to a dividend of about $4.68, because I think the stock price is around like $1,000, if I'm not mistaken. They have operating cash flows of $418 million. And when it comes to earnings, they aren't the best when it comes to beating earnings. So there's two ways to look at earnings, with and without your non-recurring incidents. So with those non-recurring incidents, they have only beat earnings 2 out of the last 8 times. And I did run into some issues with finding like the data for a couple of these. So the ones I couldn't find, I just counted them as misses. I don't know if that's wrong for me to do or not. Y'all let me know. But if you do not count those, if you do not count, if you don't count those non-recurring incidents, without those, they have beat earnings 4 out of the last 8 times. So 1 year out of the last 1 year in total out of the past 2 years. So a little bit more about their business model. They operate primarily in the Permian Basin, and the Permian Basin is an area out in West Texas, and it kind of overlaps southeast New Mexico a little bit. So that whole area is just like a lot of straight flat land where people drill for oil, and they own a lot of land out there. So another thing that I thought was cool was that their only operational expenditures come from their water and resource management segment, because they don't actually produce oil. They just own the land that companies like Chevron and Occidental, where they drill for oil, they pay Texas-specific land to operate on their land, and they also pay royalties on all of the oil that they sell to be able to operate there. So that's why TPL has such great margins. Their main source of income, they don't really have to put any money into it. And how their revenue is generated. So they have fixed fees for the usage of their land. They sell materials used in construction of infrastructure, so things like sand and things like that. The sale of their sourced and treated water from the land. And then they have easements, which is, having the rights to water and things like that. Commercial leases and temporary permits related to different uses for the land, such as midstream, infrastructure projects, and processing facilities. So the way their income is broken down is really, really simple. Like I said, they have 2 business segments. That land and resource management segment making up about 70% of their revenue, and that water services segment making up about 30% of their revenue. And I told you they operate in the Permian Basin, which is in Texas, which is in the United States. Therefore, all of their revenue comes from the United States. And so before we get into how this company has been performing over the last quarter or over the past year, I want to tell you their KPIs, their key performance indicators, and these are the things that they state in their annual and quarterly reports so that you know how the company is doing. So they have oil and gas royalties, water sales, produced water royalties, easements, and land leases, right? Land sales, my fault. So if you look at their most recent quarter, this will be Q2 versus Q1. They had revenues of $127 million, down from $174 million in the first quarter. They averaged 24 BOE, which is barrels of oil equivalents per day. So 24.4 thousand, down from 24.8 thousand per day. They had oil and gas revenues of $89 million, down from $92 million. Water sales of $40 million, up from $37 million. Water produced royalties of $25 million, up from $23 million. They didn't really have any land sales or anything like that in this second quarter, but in that first quarter they had land sales of about $1.2 million. And their land sales is grouped in with the other small things that they do that don't really have a material effect on their own. So they call it land sales and other income from other small operations. And they had a net income of $114.5 million, up slightly from $114.4 million. So 2023 versus 2022. So in 2023 they had revenues of $631 million versus $667 million in 2022. Barrel of oil equivalents was about 23.5 thousand barrels a day versus 21.3 thousand barrels a day. Oil and gas royalties, $357 million versus $452 million in 2022. So that took a little hit. Water sales, $112 million, up from $84 million. Their produced water royalties up to $84 million from $7 million. So that took a really big jump. Their easements, $70 million versus $48 million. And I don't know if I said this on the last slide, but easements is just like the rights to like water and things like that on the land. And then land sales and other operations. So in 2023, it was 6 million that came down slightly from 9 million. So some things that I noted as I was doing my research that I felt like would be good to know about this company. So they recently engaged in agreements with third parties to do other things with their land, such as construct grid-connected batteries. Some people want to do studies on carbon capture, and it's also about developing Bitcoin mining facilities, which I thought was really interesting because I'm looking into getting my first couple $100 of Bitcoin in the very near future. They have three major customers that make up 43% of their total revenue. So that's Occidental Petroleum Corporation, which I think is the one that Warren Buffett has a pretty decent stake in. You have Chevron and you have ConocoPhillips. And in 2023, they got an SWD easement. And SWD is like another company. I think they got an easement from them. I can't remember what SWD stands for. I didn't write it down. And they got granted the water rights in over 49,000 acres of land. They invested 15.2 million in TPWR projects, and that's just the water segment of their business. They have it under LLC, which stands for Texas Pacific Water Resources, and they gained 21.4 million in intangible assets and other land. So they had a pretty good year, that I would say. Some risk factors of this particular business. So their royalties are dependent on oil and gas prices, so they fluctuate with the prices of oil and gas. Their revenues are also dependent on decisions of other management, and by that I mean, since they don't directly produce oil, they just own the land. If those companies like ConocoPhillips and Chevron and Oxy, if they change anything about their business model, if they decided they wanted to get out of the Permian Basin, if they decided they wanted to drill for less oil, anything of that nature, that would affect their revenues because they can't tell them what to do with their business. They just own the land. Storms and floods, obviously, because their business model depends on them being able to actually use the land. So there's that. Decarbonization efforts. So we're in this time where people want to, burn less fossil fuels and protect the ozone layer, things like that. So if those decarbonization efforts led to a decrease in the usage of things like oil and gas, then their revenues would take a hit. You have a global health crisis like COVID. So if anybody remembers when COVID was going on, nobody was driving, oil, gas prices were super cheap, nobody was flying. Things like that hurt this business model because the consumption of the particular commodity is at a low. And supply chain issues for doing things like, selling the sand and stuff for construction that they do. I don't think that'll have too big of a, effect on their business, on their revenues, but it is a thing. So now we're going to talk a little bit about leadership and management. So of their board of directors, 5 out of 10 of them have experience being a CEO or a COO. 8 of them have experience in this particular energy, being the oil and gas industry. 6 out of 10 of them have experience in finance and accounting. 5 out of 10 of them have experience in public policy and regulatory things. All 10 of them have experience of being on some public board of another company, and 10 out of 10 of them have risk management experience. And some of these companies that the board of directors has experience at include things like Arcasa A, Cabot Oil and Gas, USAA Federal Bank, Goldman Sachs, Lockheed Martin. You have your Air Force, Centerpoint Energy, McDermott International, Accenture, Duke Energy, Texas Roadhouse, Deloitte, and ExxonMobil. And lastly, the CEO, I like to say this for last. I couldn't find too much information on him. I don't think there's a lot of information about him out on the internet. Doesn't seem like he does really interviews about his personal life. He only really talks about the business. But the only thing I could really find on Tyler Glover is that he has 10 years of experience in this particular industry. And that's it, man. That's my breakdown of this company. If you want to see more, I have a whole playlist on me breaking down other companies. I will be dropping videos like this every Wednesday. Every Monday, I drop a review on whatever book I'm reading, however much I finish with that book that week, I'll talk about it. And on Fridays, I have something kind of like a podcast, or I like to call it a brain dump, where I just talk about, things that I've learned that week, different whatever frameworks or thoughts or like any thought-provoking ideas that I may come across throughout the week. I just like to, share it with people, share it with you all on Friday, either Friday or Saturday, whichever day I decide to drop the video. And on Sundays, I'm a Christian, so I'm reading the Bible from front to back. And on Sundays, I just do a little Bible study where I talk about whatever I read in the Bible that previous week. So yeah, man, if any of those sound interesting to you, please tune in to some of my other videos. I appreciate your support. And yeah, I'm out.